Back, let's get into that market picture now and how things have fared today. Well, it's down for the Asian market this morning following another Wall Street rout as disruptions to global business from the coronavirus beyond China worsened, stoking fears then of a prolonged world economic slowdown. The spread of a new coronavirus has indeed accelerated so much in the likes of Europe, Britain, North America that is as well, if investors who once played down the virus now reassessing that risk, which means more volatility in that financial market space. Let's get into that market picture though, not necessarily looking the way one would like. That isn't unfortunately the picture for now. It is down for the Nikkei, 2.72%. Closing the day at 20,749 points. The Hang Seng is down 2.54%, closing off in that Hong Kong stock market with the Shanghai Composite slipping 1.2%. Hopefully we'll get that corrected for you. That isn't the market picture for now. It's another sell-off as well out in the United States, sharply down as well, with shares of banks and travel companies pummeled as large swings in the market continue due to uncertainty over the spread of that coronavirus and its economic fallout. Now, the Dow Jones Industrial Average fell 3.6%. Massive fall there, 26,121. S&P 500 down 3.4%. The Nasdaq Composite also dropping 3.1%, 8,738 points. Let's move on over to Europe. Of course, the big question has been how exactly will Europe react to how things have been? We got a sense of positivity when we saw the central banks across the world decide that they would perhaps try to help out in as many ways as possible when it comes to the coronavirus and its impact on the economy and as well, of course, on equity markets. And that happened as well earlier this week. We saw the Fed Reserve out in the United States decide to drop down interest rates out in the United States. Is it enough? Unfortunately, not by the seams of things. Europe has also gone down. We will see what the ECB's reaction, though, will be, considering where things fare and their commitment then to standing ready to help out if the economy certainly needs. On the local front, we've also suffered quite a bit, 1.7% down for the local index, and that continues to have been in the doldrums, now 51,506 points. Industrials following that picture, of course, that came out of Asia as well, which is all red and negative, as well as the financials dipping down too. Now, the gold index may be the one where we see a bit of rise over some time as, of course, investors begin to invest just a little bit more in what they consider a safe haven. So there it is, the only green spark out of a sea of red. Resources overall and the platinum counter going down, unfortunately, in these difficult times. And then onto the commodities space. For now, that gold price is down at $1,684 a fine ounce. But let's remember that it looks to be headed towards $1,700 as things fare right now. And it does tell you that it is indeed that safe haven that investors are getting into. Platinum is down as well, with that oil price continuing to just wallow. More than 2% loss today with that oil price. Demand questions have certainly played their part, although OPEC is also seemingly willing to come to the party and draw down when it comes to their supply. 1.5 million barrels per day in terms of a cut. But it will be fully dependent then on Russia and all the other parties agreeing to that drawdown as well. Very quickly, here are the currencies as well. 1571 continues to weaken, doesn't that local currency then? Of course, just after we got that first case of coronavirus in South Africa, that saw that currency also get pummeled quite extensively. 2043 for a pound, 1776 for a euro. And out in the BRICS countries, well, slight sense of positivity on that front there. Let's chat about all of this now and what it means to the market. We are joined, of course, by Warwick Lucas from Galileo Capital on Friday. As usual, Warwick, thank you so much for the time. We did our customary kick, as we usually would do at a time like this. Unfortunately, coronavirus not allowing us to shake hands, I suppose, then, in this context. It's been a topsy-turvy week, and we won't talk equity for now, but certainly coronavirus impact has just changed how the economy sort of works. We're just finding the reserve banks of particular nations saying we'll come out and help as much as possible.
Yeah, absolutely. I think the market has certainly, and I'm talking markets generally now, bond markets and equity markets and so on, have woken up to the potential issues around it. And certainly one of the concerns is that in the inevitable economic weakness that's going to happen, so certainly in some areas more than others, there is the risks of the likes of a credit crunch, and banking failures and so on. One has to watch out for that when you get a sudden shock to an economy. And I think the equity market's response to that Fed rate cut was really a little bit overdone, in that it got hugely positive and overexcited and bounced up. And it was really missing the point, is that the Fed was proactively trying to make sure that that the scope for a credit crunch was preempted, and hopefully we see some similar consideration by our local SAB, because I mean, we already had a weak economy. I mean, now further risk, even if we have no further cases, we still have a sentimental risk getting imported from overseas, threatening our economy, and we have same potential risks as well, that we could get a credit crunch here as well. And I would like to see the SAB on a proactive footing to counter that risk.
Do you get a sense that we could be on that path, that the SAB could actively come out and say, you know what, we will actively try to look out for the economy in the best possible way? We are, of course, in a recession. Inflationary pressures are certainly down by the seams of things. There's enough in this economy for us to be able to cut again.
I haven't seen any indication from the SAB, which doesn't mean that there hasn't been something put out by them, but I certainly haven't seen anything, and I hope they will revisit that stance and look to become proactive, because unfortunately when things are this fluid, it begs some at least consideration and preparedness by these authorities.
Yeah. Are there any bets being made on how far the rand can go in terms of weakness? 1571. We started the year at 14 on the dot. We've lost R1.71. That's a massive, massive weakness.
That's quite a big beating. I think the concern for South Africa, as always, is that we're at the tail at the end of a dog. We are, in terms of our export performance, substantially a commodity economy. And, of course, the number one consumer for that is China. And that obviously is going to be quite severely on the back foot with this. Secondly, the dollar itself is a safe haven asset and the rand is not, so we're again on the wrong end of that. So our one bright spot is the precious metals complex. So.
Yeah, and if that begins to dwindle in some instances, that doesn't necessarily bode well. It's a time like this, though, that the likes of palladium, platinum, that have done so well recently, also begin to suffer a little bit, and seeing only gold perhaps begin to pick up and tick higher. How best do you take advantage of a time like this, especially if you're in the resources space?
Okay, so I think when in the case of gold, it's I guess it's produce what you can. I mean, why gold at a time like this? Why shouldn't it get beaten up like anything else? Well, I mean, part of it is that diseases are also political events. They create disruption. So just like we saw with the bubonic plague in the Middle Ages, completely unraveled medieval society and the feudal system. I mean, today, for example, you know, China's political system could come under threat as a result of this coronavirus and the initial bungled attempt to deal with it. So it makes things fluid. Governments can quite easily be on the wrong side of this.
Companies are certainly on the wrong side of this in many ways too, right? Manufacturing gets a hard beating as well. And Africa's largest drug maker, Aspen, certainly could suffer at the back of this, despite trying to offload as many assets as possible to deal with its own debt burden. They're making that announcement as well this week. Yeah,
look, I mean, it was an okay set of results, I think. They projected it in a normal year that things would go better. But there's a lot of risks and a lot of opportunities at a time like this for a company like that. I mean, on the negative side, they're at risk that the active pharmaceutical ingredients that go into the drugs that they make, that the supply chains get cut. There's also the possibility, for example, they produce a lot of thrombosis drugs. Do some of those patients die off and cut volumes in future? That is a risk. On the upside, there obviously is the production of drugs to deal with the coronavirus as well, and that is as yet a clearly unknown situation.
Yeah, it does get a whole lot more difficult to deal with as time goes by. Next week is another week we'll see what happens. Warwick, appreciate the time. Thank you so much. We'll do
Thank
our
you.
customary
foot tap.
kick there as well. Thank you so much for that time. Warwick Lucas there joining us from Galileo Capital, helping us unpack that market movement.